Hello and welcome to the Pinnacle Financial Scribbles series. I'm your journey's host and financial disruptor, Adrian Harasymiw, wealth builder at Pinnacle Financial. In this brief video, I'm going to scribble my way to helping you better understand the basics of assets, as characterized in the world of high finance. To be sure, this is not a comprehensive discussion. Instead, I wish to spark an appreciation of financial terms such as assets so you may feel more comfortable in plotting your family's financial future. When it comes to financial statements, assets are found on the balance sheet, otherwise known as the net worth statement. Generally speaking, assets are anything you or a company or even a government own. So for all intents and purposes, your house is an asset. So is your bank account or your truck or your investment portfolio. Now, assets can be divided into current assets and non-current assets. The main difference is how quickly you can convert the asset into cash. So current assets are the ones you can, and very likely will, convert to cash within 1 year. For example, your stock market investments or your bank account most likely are current assets. On the flip side, the non-current assets are those that are not easily converted into cash and can take more than a year to sell, if and when the time arose. So for example, your wine collection on the personal side is likely a non-current asset because while it does have value, it will take a lot of time and effort to properly value it and find a willing buyer to take it off your hands at a fair and agreeable price for both of you. On a corporate balance sheet, a current asset would be something like their inventory of goods that they have on hand, ready for sale, as there is a high likelihood the inventory will be sold in a given year. On the corporate flip side, a non-current asset might be a warehouse the company owns, which would very likely take more than 1 year to sell and liquidate into cash. Now, believe it or not, there is another way to categorize assets, and that's to label them as either tangible assets, so this is something you can touch, like your car, versus intangible assets, something not of this physical world, such as intellectual property. These distinctions are normally used in the corporate financial world and not in the personal finance sphere. When it comes to personal assets, I use a system I developed specifically for my Pinnacle financial clients to help drive growth of wealth in the correct assets, because not all assets are created equally. Regardless of whether we are studying assets owned by private individuals, public companies, or governments, it helps to understand assets to be able to identify what the entity owns to help generate financial returns, as well as value to the community. Without assets, income would be difficult to generate, expenses wouldn't be covered, and hence there'd be a lot of stress on the entity in question. Now, before setting sail to another video or daily task, remember to press the like thumbs up button and subscribe to the channel to set your own breadcrumb trail back to more great and quick financial learning opportunities in these Scribble sessions. Oh, and by the way, if you need an organized place to store all your notes from these fabulous financial Scribble sessions, head on over to www.mypinnaclelife.com, where I will send you this snazzy My Pinnacle Life notebook and pen once you sign up for my free weekly Pinnacle Chronicles email. Stay on top of what you learn here as you embark on your financial journey to the great and unconstrained life you deserve. And now it's time to get ready to get your skin in the wealth game on your journey to the pinnacle.